Good afternoon. My name is Ahmed Kabani from Kabani Hotel Group. I have a pleasure today to meeting Jeff Kolessar, whom I know for a long, long time, Jeff. And he is from the GF Hotels and Resorts. I've known him for, I don't know, over 16 or 17 years. And thank you for coming today at our new office. Before I want you to introduce, you know that we just with Marcus for almost over 16 years. You've come so many times here. Earlier this year, I had the privilege to work with them for the last 16 years. But this time, I took this ownership approach with my team, and I'm looking forward getting more involved in hospitality, both in a brokerage, advising, consultation, development, and you know I do my forum every year. So welcome, Jeff.
Great.
I wanted to.
Well, once again, thank you for having me today, Ahmed. Again, congratulations. Great office setup. Thank you for the tour. You made the move over here to Kabani and started the Kabani Hotel Group. As you mentioned, 16 years of working closely together.
Yeah.
7 years, I've been to every one of your hotel conferences that you've hosted in the past, spoken many times. We value our relationship, and you've got a great team here.
Thank you.
We've worked on many hotels, transactions over the years, and it's going to be very successful. And you're in a great location here in the heart of downtown Miami as well. Yeah.
To tell our audience about yourself and
Sure.
about your company.
No, absolutely. Again, my name is Jeff Kolessar, the Chief Development Officer with GF Hotels and Resorts. I've been with the firm 34 years now. GF is a hotel company based in Philadelphia. We operate in 30 states throughout the country. We have 160 hotels in our portfolio, about 24,000 rooms. All different brands, from select service hotels to high-end full-service resort properties. A good chunk of the portfolio is Marriott Hilton based. We have it's 27 hotels here in the state of Florida, actually one of our largest exposures, with a large presence in the Central Florida, Orlando area as well. Going back to the ownership group, I'm a little unique because my role within the company is all business aspects, vis-a-vis acquisitions, third-party management. I'm a partner in a number of our hotel deals as well. So I kind of bring that entrepreneurial approach to dealing with hotels.
Excellent, Jeff. And I know that knowing that working relation with you have over the period of that relation, both with the owners, management, and knowing you in terms of how GF operates. So it's great, and look forward for you have a relation for this year and continuing more many years.
Oh, absolutely. I was trying to remember how many hotel deals that we've worked on over the last 16 years, and I know we're at least in the double digits that we worked on together, both either acquiring the hotels on behalf of some new owners, coming in as third-party management, hotels that you've been selling on behalf of a number of our owners as well, and sitting here today, and you're giving me a little history, and you've got to be proud of what you've done here. Coming over to the Kabani team, I think you mentioned you've got 25 listings right now, which is tremendous, compared to some of the bigger shops out there. And your knowledge, I think if you go back and look at the number of hotels and looking at your book that you sold in the state of Florida, you and your team, over the last 10, 15 years, it's probably one of the top brokerage groups. Your team here has sold probably the most hotels in the state of Florida than most of the other brokers down here.
Thank you so much. That's very humbling. Now, one thing I wanted to ask you, just yesterday the Fed announced, and everybody was waiting to see what he's saying. And he's not raising the interest rate, but still this transaction movement are very like not happening as much as it should. The owners are still feeling pinch on their distress P&L because of the lender cost. What do you think about this interest rate? And do you see anything drop end of this year? How do you feel about it?
Well, I'll give you my opinion. I don't follow politics, but it just in my opinion is with the Fed coming out yesterday and holding firm on the interest rates. I personally don't think that you're going to see any type of drop between now and the election. And then I just think politically, nobody wants to walk that fine line in terms of making a change. If you go back to January, everybody got excited. There was the announcement we're going to have 6 rate drops this year, and we're 4 or 5 months into the year, and they said it's flat. We're 60 days away from the next announcement. I personally don't think the closer you get to the election, the less likelihood of anything that's going to happen out there. That's my opinion.
But transactions are happening still. How do you see in the market?
So what we're seeing in the market, again, we wear different hats in terms of hotels we're selling for owners. We are seeing transactions occur. We're seeing some first-time buyers come into the hotel space to buy properties.
Okay.
There still is a little disconnect out there in terms of owner expectation versus where the market's saying. And if you think about 3-4 years ago, we're up 300-400 basis points in terms of interest rates where we were.
Right.
I go back to my first hotel deal that I did in 1993, did an acquisition. I was a partner in a deal. Interest rate we had on our loan was 7.75%.
Oh my God.
We jumped for joy. Nowadays, 7.75. People think, if you're looking at a deal and you bought a hotel 3-4 years ago, if you didn't get 4%, you're very upset.
Very upset.
I think 7% is probably going to be the norm going forward. You go and look at the 30-year average of interest rates, it's about 7%.
So how do you make the profit cash on cash? What do you advise owners running the property?
I think we're coming out of a difficult time. We came out of COVID. We had a great run leading to 22. We recovered very, very quickly in a lot of the markets.
Okay.
We had a lot of forgiveness in terms of the customer expectation. Service levels were tempered a little bit at the properties. Nowadays, the brands are now starting to say, hey, it's time to get back to what we were pre-19. You've got a little better. It's time to renovate. You're where you're at. I think you just have to be very cautious in terms of where you're at. Wages aren't going to go down, so you still have those expectations out there. It's going to be a challenging time out there across the board. You just have to be a little bit smarter in how you do it. The RevPAR growth that we've seen in most markets over the years, it's tempered off. Just talking, we operate in 28 states, and if you look at the portfolio, you read the industry-wide, STR for the first quarter of this year is off.
It's off, that's what I'm saying.
Transaction volume's off 30-40% even the last year as well. So it's challenging. And until those expectations between what the buyer's expectation is and what the seller is, and then you've got the pressure of the loan maturities that are upcoming.
So the market RevPAR growth, do you see which state is doing better in RevPAR? Like Florida is still, South Florida is very strong.
South Florida seems very strong. Again, what's helping some of these markets is the tempered, new supply. You're not seeing a lot of that happen in a lot of these marketplaces. There's special events, but Orlando had a soft first quarter.
Yeah, first quarter soft, yeah.
And I think that had a lot to do with the leisure demand in the Orlando market. We were fortunate. A lot of our hotels, we had a strong group base built in. If you had a strong group base in, it could make up for the fall off or the lower demand on the leisure side.
Oh, okay, that's the same. So the question that I was asking that in terms of going forward between and next 6 months and going, do you see that any geopolitics issues and other things are happening? You see anything affect the distress sales? How do you see that the distress? Everybody's talking about distress sales and because of all the other problems they are facing up with unknown factors. And we were just talking before this interview that distress market there may be, but it's not. How do you advise people? What is
Everybody's been waiting for distress since COVID started. Funds have been raised. There's a lot of money on the sidelines as well. The one unknown factor, I wouldn't call it a distress because the fundamentals are still pretty strong.
Super strong, yeah.
Distress would mean you have to fire sale everything out there.
Got it.
Where people have to look, define distress. Distress in most scenarios, you've got a mortgage on a property, you have equity on a property.
Right.
If equity's wiped out, it's really not distressed because the equity's wiped out, but the debt's still there.
Debt's still there.
When it's distressed, it means you're below the debt value. That's how I look at it.
Absolutely.
So that's where the expectations have to come.
But remember you were saying that a little earlier that the lenders are still working with the
Correct.
It's a relationship is still there.
If the relationships are still there, and most of that is on a maturing loan,
right?
It's relationship driven out there.
You have gone through a period of many cycles. Is this cycle any different than what we had seen the cycle back in the crash that we had 2011, 12. How you see anything similarity in this one?
So if you go back to, I've been involved with four cycles
cycles,
actually. So I go back to the RTC, the FDIC
Right.
era back in 1990. That was a little different. That's when you were buying at pennies on the dollar.
Right.
Completely different. Banks had to unload stuff very quickly. That's when we acquired a good chunk of our portfolio. Next cycle that came out, you had 9/11, which was a very quick recovery after that.
Absolutely.
And then you had the GFC.
Yeah.
The GFC, came out of it. You had all the financial institutions were pretty much shut down.
Right.
There were some still fundamentals, but nobody was really lending into the marketplace. Here, the fundamentals have come back fairly quickly. We had COVID, things were shut down. Once things shut down, leisure came back in a lot of these markets pretty quickly. The rest of the industry, corporate's still going to be what it is. I don't think corporate's ever going to come back. Whatever we have today,
My God.
office buildings are still running, 40, 50, 60% occupied. Most people are still Tuesday, Wednesday, Thursday in the office. That's not going to change. So it's about group business, doing those types of scenarios. When you say the geopolitical issues that are out there, again, I don't follow that, but who the heck would have considered, what's going on in the unrest at all the college campuses right now for no reason at all.
Unbelievable.
Correct. But that popped up in a couple of days.
The last thing I want to ask you, if you have to get some advice from you for the hotel owners, we deal with the limited service, select service, to some luxury. What is your experience in present environment to the hotel owners for us? What they should do?
You go back to the basics of blocking and tackling, essentially.
Okay.
We came out of, we always say you have a playbook to operate a hotel.
Okay.
And when we hit COVID, we came out of that playbook and, you could have the same playbook for 20 years,
Okay.
30 years. COVID, you had to just take that playbook, throw it away, and start a new one. Now we're back again. It's almost like you're looking and you've got to revitalize that playbook again and do some of that. So we've done a lot of that internally.
We tell people to go back to 2019 operation when everybody was up, if you remember.
Yes.
And then COVID came 21, 22. Like right now, 22 was good. Like 21 was good. Like 23 was like up and down, And we don't know. So we try to underwrite based on what 2019 number we're doing and how you can manage the property. The valuation becoming a key factor right now for many sellers to figure out, and we just have to be very honest about how we can do. So lately, we are doing the valuation based on their management style and how the market will turn around. Because with the lending thing, remember in 21, 22. The interest rate was still low until, if you remember, it went up. So the valuation is affecting because of the cash on cash. But you said here, go back to the basic and run your operations, do your renovation properly, manage well, Those are basic things that make sense. The hotels will do it,
Correct.
Am I right?
Yes, you're absolutely correct, yeah.
So the last thing is that, you have been coming to my forum every year.
Yes.
I was privileged when I was at Marcus. I started in 2016 when you were first. We do every year hotel investment forum, and the theme on the forum is not to publicize any business deal. It was educational, to have a conversation, and my mission was to bring people in to understand how the market will turn around as they go into the next year approach. So my theme was there. If I did the end of October, people will know within 2 months, they will know the market and how to prepare for the next year. And we hear all different conferences throughout the year. So it's been very successful. And you say last 2 years, I've been getting good attraction of the panel discussion. You have joined a number of times as a panel discussion. So this year I'm doing it again in Thursday, October 24th, 2024 from 10 to 4 p.m., and I'm proud to say that I will announce a very good, nice hotel right downtown, once I confirmation. So we'll be very happy that we will be right in downtown, and I hope and looking forward for your participation and enjoying it.
Absolutely, Ahmed. And as I mentioned, I've been to all 7 of your events in the past. Great event.
Yeah.
Great information, as you said, specifically in the Florida markets. Very knowledgeable, good networking opportunities.
Yeah.
And, again, GF Hotels and Resorts will certainly be represented at your conference again.
Thank you so much. And thank you so much. It's my pleasure. I'm Jeff Kolessar is a very good friend of mine, well managed, well known, respected leader in the hospitality industry. I'm grateful that you came here to see our new building, our new office, as well as to speak with us. And at this point, I will say thank you very much. Look forward to another interview with another leader in the hospitality industry soon. Thank you so much. Thank you. Appreciate it.